G'day everyone and welcome back to Pete's Investing. Today is May the 19th, 2023. This is the NIKKEI Japanese market index update. On the weekly, we've got a bullish signal on our indicators and likewise on the daily. So it says predominantly bullish, but be aware we've got a divergence on our CCI on the hourly chart. So let's have a look at each of these. For those new to the channel, we look at the combined triple moving average of the price chart. It's moving average 3, 5 and 60. And if they align with the CCI 150 moving average 5 and 50, then we give it a bullish signal. If they're aligned on the short side, we give it a bearish signal. And if they differ, we give it neutral. So at the moment, it's bullish, and it's because of this huge bullish candle for the week, and it's been going up quite substantially in the last few weeks. That's our weekly trend. On our daily indicator, let's look at the daily chart. Let's get rid of that. We've got a few things here. We've got the support at 25,612, a resistance at 29,239, and we've also had these two diagonal trend lines and also this other diagonal. So if I zoom out, they just run between those lows, those highs, and those recent lows as well. And the reason I keep them in there is just because if it's going to pull back, it's going to pull back somewhere probably along those diagonals in the near term. Now again, this is giving us a bullish signal on the daily. So one of my rules is predominantly to trade in the direction of the weekly and daily trends on the lower time frame. So in this case, I'm looking at the hourly, but you can do that on the 2 hourly or even the 4 hour time frame if you like. But looking more closely at the hourly, even though the weekly and daily are showing bullish signals, we've got to respect any divergence that shows up. Now what I've got here, generally, let me just go back a minute. Generally, you'll notice the CCI tracks with the price generally. So if there's highs there, there's a high there, drop down, there's a low there, and so on. Then that applies for any time frame, including the hourly. The CCI usually tracks with the moving averages or the price chart. Now there is when it does show a divergence like it is currently, we've got to respect this. Now, as I say, most of the time these divergences work, and on a few exceptions they fail. So we keep tracking this. So as long as this keeps tracking to the downside and this keeps going up like it has been for the last few days, then we keep tracking it. For this to fail, we need to see the CCI break to the upside and the price also to continue to the upside. Now, as soon as that breaks above this, so let's say for example it broke to the upside here and the price kept going up, then we'd say it's failed. For this divergence to work, then what we do is we put in a channel. Let me draw a channel. So we put in a channel between this divergence range only. We don't worry about any other periods. And by that I mean, let me just finish this channel. So we put it on the lowest candle, which is that one there. So that's what we focus on, that little channel in that area there for the divergence period. So for this divergence to work, we need to see it break outside of this channel and for the CCI also to break to the downside. So once this breaks below the channel and the CCI continues to break to the downside pretty sharply, then we can probably place a very careful trade. And the way you would trade that would be probably from that low there to that high. So let's assuming it started breaking to the downside today, which it's not yet, then I would put a Fibonacci level. So from that high, let's assume that was the highest it got to that recent low. And my target would be, you can put in, if you're conservative, you'll put in a target at 23%, which is at 34.79, or to be a bit more risk, if you're more, take more risk, and then you can look at another Fibonacci at 38%. I would typically take the closest of the two, probably at 23%, if it broke below there, or even at 38%. And to be more, so if I put in a little box, that would be your target area somewhere in there. I would avoid going too far into the Fibonacci's, like to the 50% or even the 61%. And really, because what you're doing is you're trading against the trend. And don't forget, our primary trend is weekly, is long, and daily is also long at the moment. So you're really going against the trend. So again, be very cautious about doing that. I normally use divergence as a potential, if not a longer term correction, it could be just a short-term correction. In other words, this price could bounce somewhere in this range and then bounce further to the upside, possibly. So there's a lot of unknowns. And remember, trading especially, there are no guarantees. There's no guarantees in life. So everything has to be done with probabilities and statistics. So I use that as a potential short-term correction, and then potentially we'll keep an eye on it. If the CCI starts breaking to the upside, then we look at the weekly and daily. Are they also bullish? Then we look at further long trades. So at the moment, that's where it's heading, and most likely we need to see a break below this channel to be a bit bearish on it. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe and support us more on Patreon. Thanks for watching, and see you in a new video. Thank you.